a share mark. So what on Vodafone?
So I think for Bharti Airtel, it's the manner in which stocks approach their results. It tells you that how the stocks would be in case if the results come in line or maybe at par with the market expectations. If that happens, then the stock continues to remain a little bit more sideways, and the previous nature of the price trend that gets replicated at least for the next, maybe a week or two or the next few sessions. So I believe Bharti Airtel could be a stock which could remain just around in this 1800 band, plus minus 50 odd points for the stock price. I don't see too much of a damage into the stock price trend, neither too much of a very big recovery into the stock. I would probably sense that the stock may just about hang around. But what's positive for the telecom sector is this very strong, sharp, sudden move for Vodafone Idea. The stock in just the last, I think, 6-7 trading sessions has moved more than 20%. It's moved from those sub 10.5 levels to now almost 13 plus, which the stock tried to close yesterday. This is a very big breakout. There are a slew of big patterns which have been broken out for Vodafone Idea in this case. One is a cup and handle pattern on the monthly chart, and that pans almost like a 13 to 15 month of a price pattern for Vodafone Idea. And the other is that swing breakout on the back of higher volume. So coupled with both of these big patterns, strong trend emerging in the recent charts, strong volume participation, I think Vodafone Idea should do very well for itself. My expectation is that with this price uptrend which we've seen for Vodafone Idea, there is a possibility that over the next 6 to 8 months, the stock may hit levels of at least 17.5 to 20 plus mark.
Okay, let's welcome on board Dharmesh Kant as well and get in his market opinion. Dharmesh, hi, morning. Good to be speaking with you. Dharmesh, a rough start to the week, some consolidation yesterday. Would you say worst is behind us or too early to call that?
A very good morning to you, Aisha, and to all our viewers. It's very difficult to say whether the worst is behind us. So there are two parts to it. One is the earnings which have panned so far for Q4. That has been an excellent set of numbers. If you move out of Nifty basket, 400 companies aggregates we have done. And for FY26, the PAT growth was 14%. That's a reported PAT growth. And for Q4, it was around 30%. So the earnings are quite robust, but the way things are continuing, and the input price, effects which we are seeing, most of the commodities which are coming right now from automobile manufacturers or from electrical equipment manufacturers, they all are citing rise in input prices, and this is going to hurt margins going forward. So uncertainty prevails. Most of the damage has been done, but if it continues beyond June, but what we were penciling at the beginning of the year was by June this should be settled. At the beginning of the war. But if it continues beyond that, then I don't think the worst is over. We will be in this turbulent environment, which nobody can, point out. So what we have been recommending is be stock specific, be company specific, and be patient. Be ready to have a correction of 10-15% of the stock prices after you've made an investment bet. But if you are there for 1 year or so, then things should be better than where we are right now.
Okay. And in terms of some of the earnings candidates, Dharmesh, one was, of course, Bharti Airtel. Vodafone stock has moved up as well. What's the take with regard to telecom?
Yeah, good morning, Ash. As far as telecom is concerned, one thing is very clear: the market is getting saturated. If you look at the ARPUs of, say, Reliance Jio, also there was hardly any movement in the ARPU for last 3 quarters: 211, 213.7, and then 214 rupees. Bharti, in fact, the ARPUs have come down for the India business from 259 to 257. So that is, reflecting of the fact that the things have been saturating, and it will be difficult to get more, ARPUs getting higher and more business. So data consumption is the only way out. But again, it will be at a cheaper price. So one has to be prepared for that. 15-16% kind of a growth would be good enough. And Bharti has done that. The Bharti, the tailwind is the Africa business, which has done exceptionally well in this quarter. And with this all share deal happening, so Bharti Airtel will have more benefits coming out of the Africa business, because so that is the region which is expected to grow in higher, 20s or early 30s kind of run rate going forward. So positive on that. Vodafone Idea, still a speculation bet, which one can take. Valuation wise, it looks cheap. It's also stabilized. It is gaining, customer traction now after so much depletion in the customer base. But if you, single me out to have a topic, I will stick with Bharti Airtel. Any declines out there, if you want to be in telecom space, that's the best bet to play out.
Interesting. Okay, Dharmesh, hold on to that thought. We'll take a very quick break. Let's just revisit what the GIFT Nifty as well is like. And it seems like once again we're headed in for a quiet start. In fact, it's inched up a little bit, 80 points higher as we speak right now. Take a break, be right back.
As well, they mentioned that raw material prices have spiked. They've already undertaken price hikes, but they're doing it in a more phased and gradual fashion. 1st April, they've undertaken price hikes of 2%, and more are likely to follow. But currently, they want to ensure that demand is not completely disrupted. Is this a real concern in terms of the kind of raw material price spikes we've seen? Have margins topped out, at least in the near term?
Definitely, yes, Harsh. I mean, this is a real concern. This is a reality which one has to go through. Most of the automobile OEM manufacturers have taken prices, price hikes, barring Maruti. I think Maruti will also follow suit sooner rather than later. And all the benefits of macroeconomic tailwinds through direct tax cuts, indirect tax cut, and interest rate cut, which was coming through, is likely to be sucked by this kind of inflationary environment. And the worst part is none of the Indian companies or manufacturers or consumers tends to benefit from this because it goes outside the country because of the input prices, raw material prices going up, of which we are the net importers. So that's a concern out there. Let's see Q1. I mean, market is always forward-looking. Even by later or midweek of June, if it reverses, then going on the backdrop of the demand growth which was seen, a couple of months of negotiation, then the things will pick up. So we are optimistic on this entire scenario, but definitely we are seeing around 150 to 200 basis point kind of a margin hit on the aggregate basis on the overall Indian INC. So that's what we are looking forward into Q1.
What would you stay away from? What would you be most concerned about, Dharmesh, from all of the trends that you're spotting?
I mean, what looks like a good, take is one is a defense pack. So there, I think there is a lot of stability, stickiness as to the order book and the execution part. Most of the companies have picked up execution. So defense is one area where things should keep on flowing on a steady state basis. And there, Hindustan Aeronautics and Rangebound Dock remains our topic. The other space which we have liked is the housing finance companies. Most of them have reported good set of numbers. We don't think interest rate hikes will come through, and affordable segment will continue to do well because of Pradhan Mantri Awas Yojana and the interest benefits which are there. Other housing finance is the company which we have been liking. Third is from the healthcare, where both diagnostics chains Metropolis reported a very good set of numbers. Thyrocare reported a very good set of numbers. It's more of a personal and preventive care diagnosis which has picked up in a big way. So that is the space which is likely to do, and hospital chain Narayana, Hridayalaya, and Apollo hospitals. So one can look forward to. So these three spaces looks fairly stable and steady state. Others, it's very tough to take a call whether the current valuations can be justifying going forward if 6 months the situation prevails.
Dharmesh, how do you look at some of the real estate companies? DLF came out with very dismal numbers, top line fall, EBITDA fall. Companies are announcing pre-sales, but they're not able to execute and bring it on the balance sheet.
Definitely, yes, Sanjit. I mean, the other problem would be the hike in the input prices and the input cost which is going to come, which they have not accounted for. So, and luxury segment has done fairly well 1 year back. And now with the market also into a spot, some of the tailwinds of other income of the people which was going to investment in the real estate is getting slowed down. That is what the feel I get from the Mumbai circles, which I have been talking about. So real estate, I mean, you have to pick out. Some few of the companies have reported very good Q4 numbers, but on the year as a whole, FY27 looks difficult for them. That's the reason why we are sticking to affordable housing finance companies. The affordable segment can still continue to do well. So real estate, be careful if you are taking a trading or investment bet as of now.
Okay, be careful about realty. Though, Kunal, what is your sense? Because we've been tracking realty closely. From the March lows, this was the strongest sector to rebound. What next now on the chart?
Yeah, I think after a 20-25% rally for the real estate index, in the last 4-5 days, we saw almost like a 7-8% drop for the realty index. We fell from 830 levels to 765, 770 mark. where we closed yesterday. But in this phase of the price correction, it looks like that many of the other stocks like Godrej Properties, Oberoi Realty, etc. These stocks have come back towards their marginal support points on the short-term chart. So I would sense that this could be a good opportunity for traders who've missed out on the previous leg of the price rally for the real estate index to try and maybe cherry pick few of the stocks in that category. It's not that you have to go all out into all stocks which have been trading as part of the real estate index, but you have to be a little bit more selective. I would still believe Godrej Properties, Oberoi Realty could be the top bets over here, even Prestige, I think at the 1450 mark.
Early minutes of pre-open. In fact, the first minute of pre-open, as you can see, around 150 points. We'll wait for those rates to settle, of course. But Dharmesh, the other big mover in terms of a pack is metals. They've done ever so well. That move on sale, 14% yesterday. But even outside of that, you'll have the likes of more earnings which will trickle through from the metals pack. What's your reading of all that's playing out? And how should one now rationalize valuations versus the run-up?
Yeah, I mean, metals have done phenomenal, price action for the last 6 months to 9 months. So we have seen in the Indian basket as well. And now we are shifting strategically from, non-ferrous space to the ferrous space. The reason being, if you look at 20 years or 10 years kind of a window, 3 to 4% is the volume CAGR for most of them, and high single digit, maybe 5 to 6% is the price CAGR on the metal prices. International metal prices were helped by the weakness in the dollar. So dollar index has come down. That has helped the metal prices on the global footmark as well. And copper for the last 2 years has rallied around 50%, and aluminum is around 40% kind of a rally. We have seen tin is far higher, 50% plus. So most of the metal prices have done with on the non-ferrous space. Ferrous was a space which has been down by 6% in the international market last year, and this year 2-3% it has been picking up. So infra spends in India will continue, and I think that is one space when one should be looking at where there will be some valuation comfort as regards to the price of the end product. So there we think SAIL, Steel Authority of India, JSW still remains the topic. Others, the recommendation is that you may still see updates, but profit taking is the call on the, say, a Vedanta or a Hindalco or Hindustan Zinc kind of companies.
Now the read-through on a Hindustan Zinc and SAIL, the big movers from yesterday?
Yeah, I think SAIL is trying to make a very strong comeback from that multi-year highs for itself. The stock in the recent past has gone through a big breakout mode. 135, 145 was the big breakout zone for SAIL, where it coincided with a triple top on multi-year basis for the stock. And post that, I think we've seen almost like a very strong rally for the stock price. The only catch over here is that SAIL generally goes into the F&O band, so that acts as a impediment to the stock price trend over the near term. I think just about 3 or 4 days back, we saw almost like a 10-15 point drop on SAIL from 180 levels to 170-75 in a very short span of time. So that tells you that the stock is generally a little bit more volatile. So traders who are looking at a buy for SAIL, they have to try and proportion their position sizing accordingly based on the expected volatility. Hindustan Zinc, on the other hand, the stock is a lot more stable. We've seen big breakout happening for the base commodity prices, silver, gold, etc. They've made a very good comeback for themselves after almost 2-3 months of a patch of consolidation. So I think at current levels of 670-75 thereabouts for Hindustan Zinc, I see a decent short-term upside. At least a 720 is what I would expect over the near term.
Okay, let me also bring in Saumil Mehta, Head Alternate Research, Mirae Asset, joining us this morning. Saumil, how are you looking at markets? Any respite at all after the kind of move that we saw yesterday?
Good morning to everyone.
Good morning.
See, my view is negative, and I think the rally which we saw last month from 22,200 to 24,600 was a bounce. We are in a downtrend from 26,300. The first leg was from 26,300 to 22,200, and now we've started another leg on the downside. So the view remains negative. My targets in the very short term would be 23,100, but I think in the medium term, we have, there are chances that we would be retesting the previous swing lows of 22,200. Now, those levels are very crucial because previously we had also taken support around 21,700, 21,900. So these levels of 500 points are extremely crucial. If we close below these levels or cross below these levels, then we break some very crucial levels in the medium to long term. So I at this point of time, I'm just looking at medium term and short term. My view is negative, and I'll be expecting a target of 23,100 and 22,200.
Okay. Okay, back to the markets, the first trades, and I think more than what the equity markets are up to, keep a close eye on where the rupee is headed next, because yesterday as well, you did see a fresh record low. While the index looks comfortable around the 23,500 print, 95.73 now on the rupee is where we're currently at. But Somil, just wanted to get a sense, given that it was a livelier day for the broader end of the market, any mid and small caps that you would recommend to our viewers?
See, at this point of time, I don't have. I'm not suggesting any long trades. However, there are a few sectors which I like. One is, pharma, which I really like, and in the mid to small cap, I like Vocard Pharma. Vocard Pharma is just broken out of a consolidation, trading above the averages. Good setup here. I'll be expecting a target of around 1800 in the medium term outlook. So yes, very bullish on pharma, but yes, you need to pick and choose and be long term invested or medium term invested. I'm not suggesting a short term trade here.
Kunal, what about your mid-cap ideas?
So I'll go with the ban, Mascot Dog. I think defense stocks making a comeback overall. We saw those signs emerging yesterday. Even Mascot Dog, I think, started to show signs of good recovery. The stock had gone through a decent correction in the past, 3-4 days prior, almost a 200 to 20 point correction for the stock price. I think at 2,500, the trade looks a little bit better in terms of a bounce back. 2,600 is without peg the near-term target for Mascot Dog. Stop loss to be kept at 2477.
Some of these chemical companies, Dharmesh, that's the other one which, I've been thinking about. Some very good numbers, the likes of a Balaji Amines. I'll quickly cover the numbers in just a minute. But anything standing out for you over there in terms of picks?
Yeah, I mean, most of the chemical companies have reported a good set of numbers. We have been liking UPL and Navin Fluorine for quite some time. And previous specialty is the other one which we have been recently studying. I mean, these were very good. All have reported good set of numbers. And these three companies we like. Shata Corpchem yesterday came out with very strong set of numbers. So that again signifies the strength in the European market, which has been picking up. So we are bullish on the chemical space as a whole. But the top picks there are UPL, Navin Fluorine, and previous specialty chemicals.
Some earnings candidates, of course, will likely be in focus today. And, let me quickly take you through Balaji Amines numbers. Such a strong set of numbers. 250 crore is where the top line was expected in at. It's coming at 395 crore. It's up 12% on a YOY basis. EBITDA at 94 crore. That's a 30% jump in EBITDA. And EBITDA margins came in at 24% versus the 17%, sub 17% number same time last year. You've got profitability, which has also surged around 58% on a YOY basis. 14 to 15 crore was where that profit number was pegged in at. It's coming at 63 crore. So you definitely want to keep your eye out on a Balaji Amines in trade today. Metropolis is the other one. 9.5% higher, largely inline set of numbers, but nonetheless, that stock is perked up in late minutes of pre-open. You also have ZF Commercial, again, a very decent set of numbers coming through, 14% growth on the top line, and you're seeing that reaction on the stock price as well. Among other names, of course, you'll have a Tata Motors CV, which has also come out with numbers. You'll see a reaction likely 2.5% higher in pre-open is what we're seeing, at least initially. Keynes Tech, on the other hand, 10% lower. Dharmesh, some of these EMS plays, are you concerned?
Yeah, the numbers of Keynes Tech was, it was the worst quarter they can hope for. Going forward, they missed on all the guidance front. But AMS space, quarter on quarter, one should not be looking for, they should be looking on more on a yearly basis. Sarma, again, a strong set of numbers, but the guidance was muted. They guided for a lower margin kind of a space. Dixon, again, they have ruled out this year as 15-16% kind of a growth numbers. What people are hoping for Dixon Technology is the next year, FY28, to be bigger year. And all depends on the Vivo deal. If Vivo thing happens, then the volumes can change dramatically for Dixon Technology. But overall, what we are seeing is a squeeze in the growth run rate from 40-50% coming down to 20-25% kind of a growth run rate, and the margins getting more diluted. So those are the concerns, and the valuation multiples which they are trading. Even on good days they can have a run up, but then sustainability or a drift into that upside is likely to be restricted. So better choice is buy on declines if you want to trade. Otherwise, wait for some time before the clarity emerges on higher growth trajectory or the valuation multiple readjust themselves to the normal levels.
Okay, Dharmesh, so good chatting with you. Thank you so much for your time. In fact, talking about,
Thank you